This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. We are seeing some pressure come into the market. This on the back of, I think, outside market volatility spilling over into commodities. We see the dollar catching a little bit of a bid, but I want to focus specifically on some of these grain fundamentals here in the very near term. This morning, we got an absolutely pathetic export sales number from the USDA for both corn and beans, and I think that added to the pressure that we've seen so far today. But looking at it from an optimist point of view, I think this represents a tremendous buying opportunity for that December corn contract. 370 has been a big line in the sand for us, something we've been writing about in our morning reports to clients. Previous resistance now becomes first support. If the bulls can defend this to wrap up the week, I think the market can continue this trend of higher highs and higher lows as we head towards the end of the year. If we're able to do that, I think the market can continue to march forward. We see additional short covering from the funds. Momentum traders pile on board and get this market moving a little closer towards 386 to 388, which represents a 200-day moving average as well as a 50% retracement from those May highs to the September lows. So that's what we're looking at for corn. Now moving over to the soybeans, a little bit more disappointing of a trade. As with corn, though, we saw that dismal export data this morning, which really put the pressure on as the floor opened up. Big level to keep a very close eye on as we wrap up the week. Obviously, 850 is psychologically significant, but above that, there's a 50-day moving average and some previously important price points between 856 and 860. The bulls must maintain price action above this to wrap up the week. If they can do this, I think that we can continue to work a little bit higher. This move today, basically, eliminating the gains that we saw on Monday. So I don't think it's anything to get too concerned about. The trend is higher highs and higher lows and short covering from funds. So as with corn, we think there's relatively decent value on this pullback. Now, wrapping things up with the wheat market, wheat has been stuck in the middle of about a 20-cent range over the past month to 2 months, basically 505 to 525. If corn and soybeans can continue to work higher, I think wheat will follow suit. And if we get that breakout, I wouldn't be surprised to see another 10 to 15 cents tacked on top of things. So what we're looking at for wheat is a potential breakout, but really waiting for a little bit more confirmation, both fundamentally and technically. So that's what we're looking at to wrap up the week. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.